We allowed smaller check sizes from like aunts and uncles and people who were just excited about what we were building. We knew our investors would be our best brand ambassadors, and we wanted to welcome as many people into that community as possible. You also have to figure out who you want to be an investor. And if someone's not believing in the strategy you have or wants you to do something that's totally antithetical to like what you're building, you don't want them anyway. Kevin O'Leary's like, I forbid, he just went into his like shtick, right? And I get it, it's a character, it's fine. But, I forbid you from working on this.
Okay, welcome back to Seed Money. Today, I am joined by Vanessa Royle. She is a Harvard Business School grad and co-founder of a company called Tilden, who has a ready-to-drink premium non-alcohol cocktail that is really good and delicious and right up my alley, and redefines how we celebrate without alcohol, which, as we know, unless you're living under a rock, is becoming more and more of a trend, which is amazing. And something that is dear to me because I have been on the drinking less train for a long time. And I love that it's pivoted even this far to have non-alcohol options that are great. So we're going to cover Vanessa's story of how she got here, her initial funding strategy, and all the success they have seen because they have broken into the market. They've overcome so many of the initial challenges, and they're positioning themselves now to go raise that next round of funding and see that next phase of growth, which is super exciting. So welcome, Vanessa. How are you?
Thank you so much. I'm doing really well.
Awesome. Well, yeah, when we got connected, as we said, I was just so excited because I was like, oh my gosh, I feel like, I know right where you're at. And it's kind of a unique place to be. It's equally exciting as it is stressful and overwhelming.
Yep. Lots of ups and downs with entrepreneurship, but it's always nice to connect with people who've been there before. And we're also in the same town, so that's amazing.
Yes, you're in Santa Barbara, which is amazing. What a great place to be doing this too. And so you're co-founders in Boston, correct?
Yes, we're a little bi-coastal team. We started the company out in Boston, and then I moved back a few years ago.
Amazing. That's a nice welcome back to the sunny land. I grew up outside of Boston, so I'm with you there. Amazing. Well, let's start off with, I think, because I mean, there's so much we could talk about on the like product side of things, which I love that whole, product development piece of it. But I think as it relates to people listening to the podcast, I want to focus a little bit on how you got started from a funding perspective. And I think you have a really important story to share on what a friends and family round can look like. And it is those near and dear to us often that help get us off the ground. So I'd love for you to just kind of share, your story and your initial, like, how you guys got it off the ground. Yeah. And we're definitely going to touch on your mini Shark Tank experience that you told me about because
Well, you're the real Shark Tank gal.
But you got some juicy.
I had a taste of it.
Yeah, you got a taste of it. But yeah, let's start off with just kind of how you guys got started and financially got it off the ground.
Sure. Yeah. So we really started working on it in early 2021. I had quit drinking about 8 months prior to that, right before business school, during the COVID pandemic. Alcohol wasn't working for me anymore. The hangovers paired with lockdown just wasn't a good combo. So I went off to business school newly sober, very quickly became frustrated that there weren't exciting options at networking events and dinner parties. Everything was either very boring, like a LaCroix or a sugary mocktail or soda. So I met my co-founder over Zoom because it was kind of this like funky hybrid business school for the first bit. We met over Zoom. She's a lifelong non-drinker from Vegas, so she had felt this frustration far longer than I had. And she has an operations background. I'm coming from a PR background. We thought we'd be a good pair to work on this together. So we started it kind of on a whim as sort of a school project. And a few weeks after kicking off, we looked at each other and said, I think we both want to continue working on this. We'll see where it goes. And, now 4 years later, it's still going. So we initially were building these recipes in our kitchen, squeezing lemons and limes. It was very homegrown. As good business school students, we were trying to collect as much data and do very neutral surveys and understand if the market was there, and pricing strategy and all that sort of stuff. And it was great because we were doing this alongside professors who were teaching us in classes. So it was a very nice place to be kind of incubating this idea, and just very timely with the fact that we had all these resources. We started thinking about our fundraise in our second year, because by then we sort of knew the product we needed. We had set up production, and we had a better idea of where funds would actually go if we raised. So we graduated in May 2022, and then pretty much kicked off our first friends and family fundraise. Prior to that, we had gotten a few business school grants. We'd been in an accelerator. We were in the pitch competition and won some money there. So we had some money for, early branding and testing. We'd actually, I said we kicked off, in May, but the prior October, I had been talking to a family friend who is a longtime entrepreneur and angel investor, and kind of out of the blue, he's like, I'm interested. And I'm like, well, we're not even really fundraising yet, but this is what it would look like. And he's like, yeah, you can use this to get your branding dialed in and kind of get things off the ground. And it obviously helps to go out to investors when you've built something. So he was the first check-in, and that was like a huge boost of confidence. Like, oh, wow, this isn't, that hard. Of course, he was a family friend. So I just want to be clear. It wasn't like a net new human I was pitching, but
still, that's so important because that is often how it starts. So how did you structure that with him?
So we've raised 2 rounds so far. So he was part of that first round. We kind of just kept the same terms, and he was totally fine with that. We structured it. We had it on a safe note. So simple agreement for future equity, which made it really simple to just have him wire the money, agree to our, discount rate and valuation cap. And we didn't, have to weave in lawyers or pay for any of that. So that was really helpful. And then we just kind of kept the same safe note open through that next summer when we actually went out to, former colleagues, friends, family. We did sort of 2 different strategies. So we allowed smaller check sizes from like aunts and uncles and people who were just excited about what we were building. And then
how small?
$1,000. Like,
okay, yeah. So no, I think that's super helpful for people to hear.
It's not nothing, but it's like, we're not going to be taking $1,000 checks anymore at this point.
Yeah.
But we wanted, a big part of that was we knew our investors would be our best brand ambassadors, and we wanted to welcome as many people into that community as possible. So we had RUV, a roll-up vehicle set up through Angel List, a platform, which is great because on our cap table, it appears as one line item rather than, 40, 50 different people on there complicating things. So it kept it really clean.
I think that is an important thing for future rounds for startups. If their cap table is complicated and messy, it can be a deterrent, and you can end up spending a lot of money afterwards to try to get all that cleaned up to even be able to raise that future round. So the more you can do a little bit of research and set that up correctly in the beginning, even if you bring in a bunch of people, there are ways to set it up in a very clean, easy to, transfer to a future round way.
Yes.
So that's super helpful. Yeah.
Yes. So we had our smaller checks, true friends and family under this roll-up vehicle. And then for larger checks, we just did direct, same terms, same everything, but just direct investments. Because we didn't want them to feel like they were just part of this thing. We wanted it to feel a little more nuanced. So, former colleagues of mine invested. My old boss from my previous job is one of our big investors. We got some kind of investors we didn't know, which was exciting. We were in a lot of pitch competitions, and we even took a class in our final semester at business school that was focused on pitching. So we got a few investors from that. So yeah, friends and family, but we had some others who've since reinvested and have been really good partners to us.
And what was the time period? Like, about how long did that all take, would you
Well,
say?
so we got that first check in October, but then after that, we weren't really, we were like, great, we got some money, we can go do a few things now. And then we started, I think we kicked off our true fundraise in like early June, and then closed end of August. So it was relatively
That's
quick.
yeah.
Maybe it was like July, August. I was on my honeymoon in June. There was a lot going. We were graduating. I got married. Like there was a lot going on. But it was pretty quick.
I was doing the same, signing investor docs at my wedding. So yeah.
Oh yeah, I was on calls in Southern Africa, like at all hours. Like, yeah, let's do it. Yes, it closed relatively quickly to us for the amount of time we were putting in. So that was great.
Yeah.
We oversubscribed. We raised just over $500,000, which was super helpful. And that stretched for like 2 years for us. So that was really, really, really crucial in getting us off the ground. We launched about 6 months after that. And then, that's how we got started.
Amazing. Well, that is congrats on all that. Not easy to do. I think many people, have an idea and never get it off the ground. So even just getting it that far, you learn an incredible, it's an incredible amount of experience. One quick thing there, what would you say is the reason most of those people invested? Did they see it as a trend? Were they mostly just excited for you and wanted to support? Combination of both? Like the bigger checks, what were, why do you feel like they pulled the trigger versus people who didn't?
I think it was a mix. The people who knew me and my co-founder certainly were investing in us because we were pre-revenue, pre-product, essentially. Most of them had not tried it. So it was betting on us, which I think is a lot of how your first checks come anyway. It's, I trust you. I've worked with you. I know you. I know you're going to put your all into this. I don't know, what is it? 99% of startups fail or something crazy. So it was a lot of, you might fail, but I trust that you're going to do your absolute best with this. And I know you and I'll, help you. I want to be part of this journey for you. So that was a lot of those colleague checks, friends and family, obviously things like that. I think part of some of those was also people in our lives trying to cut back on drinking and being interested in this. And especially the checks from the folks we didn't know prior, a lot of them were personally excited about the product we were building in the space. And while they saw it as a trend, they certainly did not see it as a fad. They saw that I think this decline in alcohol consumption is going to continue. And I've seen it in my own life. And, a lot of the angel investors were excited because they wanted to put their money toward things they felt had a positive impact on the world. And of course, moderating alcohol is a great thing to be doing. So they were personally excited about what we were building. And then obviously believed in us enough to give us that first check, pre-product, pre-revenue, which is always interesting. I do think it's almost easier sometimes to raise before you product to the revenue.
Yeah.
We did our pre-seed round last year, and it's then you get held to numbers, and you're like, if you didn't grow as much as you thought you did, or this changed, or you pivoted, or whatever it is, now you actually have people digging and going, what's this? What's that? Pre-revenue, you're just like, yeah, we're totally gonna hit $50 billion in year 2. Fine, great, cool. So,
yeah. No, it is. It is.
Vision is not too hard.
Yeah. Amazing. And were you sending them all samples or meeting with them in person? Because if that was sort of during COVID, how was that working?
We did some in-person pitches in class, and then Zoom. It was all video. Still, it's mostly all video meetings. I mean, I've met a lot of investors in person, but a lot of Zoom calls, even just friends and families, emails.
And so they didn't ask to taste it, or you would mail them samples, or?
We mailed some samples. A lot of people invested without ever having tried it.
Love that.
We didn't even finish the recipes till the fall. So we had very early stuff that we were selling on campus, bootleg bottles that we were selling on campus. So people had they understood what we were building enough to be we trust your taste and it's going to be good. But again, I think some people were just investing in us, and but it was very exciting when we finally launched to have all of our investors like get the bottles and be like, oh, wait, this is great. Like, glad you like it since
Yeah.
you're
Really
cap table now. So
amazing. Okay. Well, that's insane. Love it. So where are you guys at now? Like, what did, what was your launch and where are you guys at now and where are you going next?
Yeah, so we launched in February 2023, so almost 2 years after we first started tinkering on this. So it's been about 2.5 years since then. We are in about 30 states, mainly focused on California and Massachusetts, where we are. So we have distributors in both those states. We've been very, very focused on what's called on-premise, so bars and restaurants. We personally are the most frustrated when we go to restaurants and can't have a great beverage alongside our beautiful meals. So that's where we've started. And it's been a really good channel for us because you build brand loyalty and awareness, and people get to try the product. And then they go try to seek out, local retailers or go Google it or look it up online. And so we've built this kind of great flywheel with having these restaurant and bar partners in different locations and then having consumers go try to buy it elsewhere. So that's really what we've been focused on. We've launched into all of the RH restaurants across the country, which is about 22 different locations. Really cool. They've built out a non-alc menu. We're very much targeting the bigger restaurant and hotel chains. We're at the Ritz-Carlton Bacara here in Santa Barbara. We're in about 40 other restaurants near me. And that's been, me pounding the pavement and knocking down doors and being really, really annoying. And that's kind of what you have to do. We're also on Amazon now. So we've just been chugging along. It's 2 of us. And then we have an ops lead, and we just hired our first full-time salesperson. So that's a huge thing. We also raised our pre-seed round last year, which was a very different experience than the first round. But yeah, we've done a lot.
So what was, it's amazing. 30 states, incredible. I think getting into some of those higher end, on-premise accounts give so much credibility.
Yes.
Add to the story. So I think, being strategic there in the early stage is really important on where you go, where you spend your time, all that good stuff. How was your story different in your most recent round than in the very beginning? Like any advice for people? Obviously, like you said, you've got to now include data in your pitch deck and stuff like that. But what were maybe some of the challenges, or looking back, anything you would have done differently to get that round, and how long did that one take?
Took over a year, which is a long time. To be fair, we both had babies during that time, which is distracting. But I think the reason it took so long was a few things. We started raising when did we start raising? Maybe, summer 2024. Okay, I guess it took less than a year, but it still took a long time. I think a big thing that I learned was going out to we went back to existing investors. A lot of them reinvested, so that wasn't too difficult. They were excited about the progress. The hard part was we were raising under $1 million, which some early stage funds won't even talk to you unless you're raising more than $1 million. So, good learning is like, maybe we could have pushed that up higher and done that. We were raising on another safe, and I think there's not always appetite for that with some of these funds. I really struggled. Something I'm much better at now is knowing, it's an obvious thing, but I know my business better than anyone else. I'm in it every single day. And I think I kind of gave a lot of credence to a lot of these investors who were telling me how I should be thinking about things. And I would go back and I'd tweak my pitch deck and I'd tweak the pitch. And then the next day I'd pitch, and that investor would have the complete, they'd want the opposite thing, the thing I'd already, so it was a lot of me sort of gaining confidence throughout the process. And I think now I'm much more ready to be like, no, we're actually not going that strategy, and here's why. And if you're not interested, then that's great. Like, I think I have been told many times, you want to get to a no as quickly as possible. And I think I was just so open to everybody that it's like, no, you also have to figure out who you want to be an investor. And if someone's not believing in the strategy you have or wants you to do something that's totally antithetical to like what you're building, you don't want them anyway. So like you can move along. I think I got a bit distracted trying to kind of please everybody. So that was a really good learning. And then, yeah, it's just hard when you're trying to paint a picture of data and the market's changing so quickly. I mean, last year, the last 2 years have been really, really difficult for CPG fundraising. When we first started pitching our friends and family and we were going out to people who didn't know us, it was a lot of, I think this is a fad. There's not a market for this. And then by the time we were raising this next round, it was, I think the market's oversaturated. There's too like there's no way this changed that much in the last year. And in fact, the data is showing there's way more demand than supply. So it was a lot of like, what is true? What are we trying to paint that picture? And then we also just had a lot of investors who were giving us feedback. They wanted to see tons and tons of growth, but then we're also really obsessed with profitability. And as you know, it's very hard well, both things are hard, but it's very hard, if not impossible, to do both at the same time. So we've very much been building toward profitability. But it means that, growth is a little slower and we're very methodical with how we invest our capital. And, our margins have doubled in the last year. Like we are really, really proud of the foundation we are building for our business. Every choice we make, every channel we go is a very strategic, thought out thing. We're not just chasing growth at all costs, but I think there are a lot of, very popular, flashy companies that chase growth. And just with the acquisition market that was there, those weren't being acquired. So you kind of had these investors who saw all these really rapidly growing companies. So they wanted that. And then they also wanted profitability, which is like how you survive. So it was a lot of trying to educate people who've never done it before how to build a company and get them to trust that I know what I'm doing. So it took a long time. We went, like I said, back to former investors. We did a lot of pitch competitions. We pitched tons and tons of angel groups. I don't think it's very rare. I mean, I don't think I have a unique story. I have friends and, founder friends of mine. We've pitched hundreds of people and been told no hundreds of times. And that's just got to get used to being told no. So it took a very long time, but we closed it in spring of this year, which was great. Gave us that final little bit of capital to make some hires, invest in more inventory. And we've just learned so much because it took so long. It's you got to make this stretch. So we still have a lot of cash in the bank and we're excited for the next round, but it's a slog. Fundraising is not for the faint.
No. I think, that happens to everybody where it's we put these investors on a pedestal and we take what they say to heart, but really they might be just saying something on a whim of one little, narrow experience they had one time. And it doesn't necessarily apply to all the variables going on in your company. And so, I learned, and I always say that if you hear the exact same thing or very similar thing from 10 investors, then consider changing. But to be just, zigzagging your strategy and your deck based on feedback will literally make you crazy. You feel like you're going, it's just.
We also just felt a lot of the early stage investors, funds, angels moved up almost. It felt like there was this chasm where the early folks used to be. The people were we want to be the ones to write the first check. You'd get on the phone and they'd be oh, actually, we only look at investments that for companies that are at 5 million revenue. And you're that's not early stage. What are we talking about? That's seed post. So it felt like people moved the needle a bit. And on the website of some of these funds, it would say we do check sizes of this. And then you talk to them, they go, oh, we really want to invest $1 million or more. And you're kind of okay, are you just trying to build up deal flow by lowering the bar, and then you kind of move the goalposts. So that was fresh. I think in general, we just wasted a lot of time in that whole process trying to understand like who was the correct target for this. We were post revenue, but pre-seed. So we were trying to still really build out, product market fit. And we had a lot of great traction we could show. But it felt like some of the folks we were pitching were kind of beyond where we were. And then even the angels, they had very crazy expectations sometimes of just what was real. And what I found is a lot of the angel groups are very tech focused. And so their expectations of valuations and revenue and all this stuff is like, no, we need some CPG investors. So we ended up getting some of the early executives from Olipop to invest. And they've been some of my favorite investors because they get it. They're like, oh, your strategy is so smart. We were there on the ground floor and we did X, Y, and Z. And like, they know when I'm explaining, the margin structure and distributors, they're like, yeah, we get it. Like, that doesn't scare us. So I've learned from that, like, I would love to have more founders as investors because they understand and they can look at my numbers and be like, oh, wow, this is great. You're on the right path.
I had an investor who had invested in multiple early stage consumer product companies. She was not a founder herself, but she fully understood the process and was patient and just understood it. You know what I mean?
Sure.
And it was really helpful.
I've had investors ask me, well, why haven't you invested more in marketing? I said, well, that's why I'm raising this round.
Yeah.
And if you have my P&L, you can see what I've got to work with. Like, like, yeah. I don't know. It's like, come on.
Yeah.
Let's be reasonable.
And yeah, I think one of the toughest things is being lumped in with tech companies. It's such a different ballgame. And I think whether people mean to or not, there's just a natural comparison to what a tech company can do that is so different from a consumer product brand, especially a brand building type of brand. You know what I mean? There is a process to it, and it's not an overnight thing typically, unless you're like a celebrity launching, the 9,000th tequila and you just plug it into your, network. And even those struggle, you know what I mean? Which is crazy. So
a lot of them do because it's a quick flash in the pan. And then unless that celebrity is actually very aligned and pushing it all the time, like there's some great celebrity brands, it's just dips back to baseline.
Yeah, because there's only so much room on the shelf and there's only so much room in the menus and stuff like that.
That's what's hard is to try to educate investors while you're also trying to get, them to invest because it all feels defensive, even though it truly, if I'm going to go nationwide in Whole Foods, I'm going to need $1 million plus to support that. If they haven't done that before or had a company that's done that, they don't get that.
Yeah.
So
tell us a little bit about the time commitment fundraising. So two, co-founders, amazing. At times, I wish I had one of those to split the load. Nice. Did you guys find success? Did you feel like you both had to be in investor meetings, or did one of you focus on fundraising, the other one's focusing on running the business? Did investors want to speak with both of you, or were they okay? Like, were you divide and conquer? Because I think that's something I've seen where co-founders are trying to be in every meeting, and that can take a lot of time, right? So tell us a little bit about how that worked.
We traded off. So when we kicked off fundraising, I think my co-founder was on maternity leave. So it was all me pitching. And then she came back and she was focused on, going out to her previous, investors who were either, colleagues or friends and family, chatting with them. I was doing the same with mine. And then we would each apply to different pitch competitions, angel groups, and then basically who was available, who was local. I pitched a lot of the local Santa Barbara group. She was doing, Boston Northeast. So we sort of divided and conquered there. There were some that we did together, but we tried to split it so that we weren't on every call, like you said. There were some like I had got, the Olipop executives. So they chatted with me first. We did a lot of the due diligence together. And then they wanted to, of course, meet Mariah. And so we set up a call for her. So it was a lot of that where, oh, I talked to this person. Now they want to talk to you. And then when I was on maternity leave, Mariah took over and we had an intern also who was helping with some of the just administrative stuff, updating the pitch decks, and following up with emails. It's just, it's a whole sales process. So that's why they recommend, do it in 2 weeks to a month, like really just build up pipeline, because we were both building the company at the same time. It was hard to completely shift to that. But my goal for our next round is really to just turn off the other things as much as possible and heads down and just get it done, because you don't want to have that hanging over your head for an extended amount of time.
Yeah. No, it really is. I mean, it takes a full like sales and marketing strategy and push.
Oh, and it makes so much sense why people bring in people to help with fundraising. Like, I've heard so many stories of, oh yeah, my husband came and did it for me. I'm like, I don't know if I could do that, but
or getting support on the operational side so that somebody can focus on that, right? I think that there's only so many hours in the day, and it takes time. It's not just a little like send an email. There's the back and forth, the questions, the tweaking, the due diligence materials, like it's a lot. So I think it just has to be a dedicated role for, ideally the founders, because I think they are the best people to sell it at an early stage.
I agree. Yeah. So I'm in the process now of doing all that pre-work. And my goal is to have a really, really, really strong list of leads, like you would in sales, that it's less of the like weeding through the people who are not the right person. Hopefully save myself some time on that. And then, dedicate a month to really like pitching, talking. Yeah. Because the big thing too is you want to build FOMO, and it's hard to do that when you're raising over a year. Like, we're going to close in 2 weeks. You keep moving, that, people don't believe you at that point. So this time it'll be a much more structured process, and hopefully it's successful. We'll get there.
Yep. The FOMO factor is real and helps. It's crazy.
Yeah, VC. I mean, we're not going for VC yet, but VC and just in the investment world in general is a funny place.
Yeah, which I think is why a lot of those angel groups, take, have interest in kind of a broad group, because they're just in case that one thing is out there. They don't want to miss out on it, but it's not fair to the entrepreneurs.
The amount of diligence we went through for like a $20,000 check, which is not nothing, but like weeks and weeks of diligence only to be told, we really only invest in tech. I'm like, yeah, you saw my P&L and you saw how capital intensive this is. Like, no duh.
Yeah.
I could have told you that.
Yeah.
I didn't tell you that.
Crazy.
Like, can we see your last 3 years? I'm like, I haven't been in business 3 years. What do you mean? A forensic accountant to go through line by line. Like, this is just one.
Yeah, that is crazy.
A lot of people aren't even showing their financials. Like, this is crazy. So
yeah,
we'll change.
Amazing. So going into the next, so at this point, will your next round be an equity round?
That's the plan. Yes.
Okay. So see, I love this. Again, I think this is so important. A lot of people, when they just first start thinking about raising money, they are struggling with, how do I value my company and all this stuff. And look how far you've gotten without having to pick a hard valuation, right? So you can delay that quite a long time.
Yes.
And it's actually appropriate to do that. So tell us a little bit about where you're at right now, what your goal is for the next round, given all you've learned. And I think just the highlights too of why you're ready for that next round.
Yeah, I think we've been building now and in market for about, almost coming up on 3 years next spring. So we have a ton of validation. We have a lot of data. We know who the core customer is at this point. And we know the channels that are really working. So, we kind of said yes to everything in the first year to understand different options and events and customers and all that. And I think just this last year, I've really refined what we're going after. So now it feels very real to say, okay, we are raising, $2 million. It's a very round number, but, around $2 million to use over the next 12 months for X, Y, and Z. And we can really distill down, like, we're going to hire, 2 salespeople who are going to do X amount of revenue. We can, put money toward paid ads for the first time, or not. We're doing it now for the first time, but we'll have data to be showing, like, this is the amount of revenue bump we'll get from that. Like, we feel much more confident saying, you give us 2 million, we'll make, X million. So we feel like we're ready from that perspective. And I think we have a much better understanding of the playbook. You and I have talked about the fact that we're not pursuing large retail right now, which is maybe not the traditional path, but we feel like it's the much more sustainable path. We have a clear path to profitability, and it just requires us to be very disciplined and try to keep our blinders on a bit. So we're definitely targeting, investors who want to invest in the, sustainable, well-run, early stage company and not necessarily chase growth at all costs. So we feel good about that perspective. The valuation piece is interesting because it's obviously a negotiation between you and whoever's going to be your lead investor. We have some existing investors who've expressed interest in re-upping. So, maybe we could figure out if one of them will lead, and then that would be an easier conversation. We've definitely faced pushback in the past around valuation cap on those safes. And it's an interesting discussion because valuation cap is not necessarily meant to be a valuation, but it is treated as such. And so it's really just an insurance policy against, outsized future rounds. But it'll be exciting to actually, put a number on it and say, this is this is our value, and you're investing at that. And hopefully we can, build a compelling case and get that investment in quickly so we can go use it in all the ways we know it's going to work.
Yeah, I love it. I think it is, that is a strong story to put in front of investors. Like, we've tested the market. We've done our trial and error. You know what I mean? We've refined our strategy. Here's what's worked. Here's what hasn't. And here's our path forward. And here's what we know we can do. And we can be sustainable. I mean, that to me is, it might not be the exciting, flashy AI story, but for the investor who also wants the product and believes in the category, that is an attractive opportunity, right? So I think, and you have a great product. So I think you guys are, you're in a good spot to do that. And it's very exciting, but I know it's hard.
Exciting and hard, but I like talking to people. So that part of it is fun. It's figuring out the nuances of when to push back, when to hold your ground.
Yeah.
Just a logical game.
Yeah. That part can be, the negotiating part is challenging. I mean, because it's your baby and it's like, you need the money, but oh my God, and you can see it from the investor standpoint also, like they need to have some say to some extent or want to at times, What's your, did you set up a board of directors early on? What does that look like? What do you?
Not yet. So we
Okay.
held off. I mean, it's me and my co-founder. We are the board. So we have our board meetings. We are a C Corp, so technically we have to do that. But we figure once we do this price round, if we have any funds come on or, big names, we can negotiate that. But we've kind of held off till we have to add more nuance than needed.
Yeah. So do you have a board of advisors, or who are you consulting with right now, like on a frequent basis to kind of get?
So we have advisors. We've worked with a business advisor since the Harvard days. So he was sort of handed to us as one of our programs and has continued to stick with us just because he enjoys it. So that's been amazing. So we meet with him monthly. And then we have a great sales advisor who was head of food service for Saratoga Water, which is like perfect because selling into a lot of the same accounts, and she's worked with big, restaurant and hotel hospitality groups. So she's been really, really key for us. We just started working with her a few months ago. And then we have a great marketing advisor who's worked with KonMari and Parachute and, Chrissy Teigen and John Legend and their Kismet brand. So she's amazing on the, branding side of things and has been very helpful. And then I'm in a lot of founder groups. So that's often the most helpful because it's people who are kind of where you are or slightly ahead. And, we're all sharing resources and tools. And, I had a founder friend jump on to the Meta platform with me last week and kind of walk me through like my Meta ad buys and all this stuff. And people in the non-alc space, but specifically in CBG, like we're all very willing to help. It's such a hard space. So I think no one's gatekeeping anything. We're all just like trying to build this together. So that's been really, really great. I'm chatting later today with an advisor about fundraising specifically. She's raised $100 million, I think, for her own brand over the years. So she definitely has seen the ups and downs and knows how to tweak a story to fit a narrative. And that's such a big part of fundraising. So yeah, we have a lot of support, which is really great.
Good. Yeah, that's amazing. Love it. Okay. So tell us real quick about your little mini taste of Shark Tank, because I think that was just a funny, but also not funny story. Because I think, God, it's just crazy some of the shit you deal with during this process. But yeah, it's funny, but not funny. But I think, yeah, it's definitely something that happens. And if someone is going out, I think you kind of need to expect it to some degree, which is so sad. But yeah, tell me the story.
Crazy thing. So quickly. So there's an entrepreneurial class that's required first year at Harvard Business School. I took that with my professor, and he is like business partners or friends with Kevin O'Leary, Mr. Wonderful from Shark Tank. And so he invited him to class, and as part of it, they said, okay, we're going to select 2 students to pitch in a Shark Tank style, whatever. So I applied. I think I was one of the only ones who actually had like a real company going at the time. I mean, there were probably a few, but I was selected. And then my classmate who I adore him, and he has a real company now, but at the time it was like just something he had come up with over the weekend. We got selected to pitch. So I refined my pitch. It was a tight 90 seconds, and I, made it funny and compelling. And I did the whole like, now are you in? Whatever. I did the whole spiel. And I start pitching, and it's Kevin O'Leary and then the professor's brother, who's also a big businessman. And before I could even continue, like I said, non-alcoholic cocktails, and they both were like, I'm out. I'm like, okay. So I keep talking, keep doing my thing. And I get to the end, and they're just interrupting the whole time. I'm like, okay, I'm trying to, like, the professor said, whatever. Good lesson. I follow the rules, apparently. I was following the rules. And I get to the end, and Kevin O'Leary's like, I forbid, he just went into his like shtick, right? And I get it. It's a character. It's fine. But, I forbid you from working on this. Beverage is the hardest industry. Fair. You're a cockroach. You're going to get squashed like the cockroach you are. I've never understood that, though, because I'm like, cockroaches are notorious for outliving everything, which like,
totally.
Cockroaches are gross, but they also outlive everybody. So
yeah.
Sure. And it was in front of all my classmates. And I was just like, so I just got completely annihilated. And I just called, it was Zoom. So I was sitting at my computer in my house going, okay, but respectfully, I'm going to continue with this. I believe in this. And my professor's like, oh, good for you, Vanessa. And then, Kevin said, oh, and she's a bad listener who won't take feedback. And I'm like, okay. And then my friend pitches. And again, not super, he had come up with this over the weekend, and they gave him like 10 minutes of feedback. And I'm like, to be fair, it was like a tech product and they probably had more expertise around there. But I was just like, you couldn't give me like a minute of you should do this or not do this, or that's dumb, or this or that. And then Kevin O'Leary launched a wine brand the next week. So I was like, oh, I thought we weren't getting into beverage because it's so hard. But so yeah, that was super frustrating. And then the next morning I woke up and I was like, I'm going to show him. And then I think a year or two later, one of our competitors, Gia, pitched Shark Tank, and he was like one of the first to want to invest. And I was like, oh, okay, cool.
No way. I was like,
whatever. It is what it is. I love that, helps fuel the fire. And it was a good first sort of rejection because I've been told crazy things on pitches, and I've been told, oh, I think, old man investor, oh, I think I know people who invest in women that I could connect you with, just crazy things. And you're like, okay, cool.
Yeah.
You learn to keep your composure and like move on. And
yeah,
you just got to grow thick skin. It's the same with sales. So
it is. It definitely requires thick skin.
I have a dream of actually being on Shark Tank one day and being like, oh, now you want to invest?
Yeah, you are not invited.
This is a pitch for everyone except Kevin.
Oh my God, that would be so good.
You can show yourself out. I'm the cockroach. I'm still here. Yeah.
Yeah, exactly. Yeah. And I think it goes to show you just have to believe in yourself and have that conviction and know. Yeah. They don't know everything. They don't know who you are, and it's okay. And people have their own. I'm just surprised that he was like that in a business school environment. To me, that's just like.
He is one of the advisors now too, for like the entrepreneurship program. And I hope he's like more helpful. I'm sure he is, right? Like, he can just be in, caricature mode, trying to advise students. But
oh man, well, very just impressive. Everything you've done. It's so exciting. Anything else you want to share, or anything you would do differently to someone who's going out, launching their product, raising that very first round? Any advice you have?
I think just what I said, your business better than anybody else. So take feedback, but don't get distracted by it. It's not in one year out the other, but it doesn't need to inform how you run your day to day. Of course, if 10 people, like you said, are telling you something, maybe take a second look. Don't be delusional. But I do think I'm trying to figure out the fine line between delusion, which honestly is rewarded in fundraising, but I'm just like not that human, and being overly realistic. I'm trying to find that middle ground still. So I think that's a good place to try to find yourself. Is you obviously want to be able to sell the vision and see a huge pathway and a huge, TAM and all the exciting things, but you also want it to be rooted in reality and make sure you're being truthful with yourself and with your investors. So yeah, sitting in that middle zone is a good spot to be. We have some exciting things coming. We have a new flavor coming out in a few months, which I'm thrilled about. It's our first new flavor in a few years. So that'll be really great. And then, we're on Amazon now, so people can get it everywhere.
Hey, I am buying it. I love it. It's perfect flavor profile and not zilch, which is so good.
Yes, we didn't talk about the product at all. Yeah, our drinks are under a gram of sugar, adaptogen free. So if you're on medications, pregnant, nursing, or you just like don't want any sort of mind effect, then we're for you. And then, we use all natural ingredients and are very, very focused on complex flavor. It's really an adult beverage that just doesn't have alcohol.
Yeah, the I don't know how I would describe it, but the strength of the flavor mimics alcohol, where it feels like you're getting something that is strong.
Yeah.
In flavor. You know what I mean? So
we're not a mocktail. And it's not because like the word mocktail is a bad word or anything. It's just because no, it's a cocktail. It's like a very complex, well-mixed, balanced, beginning, middle, finish drink. It just doesn't have alcohol. So it's not going to be like the mocktail, which traditionally is just, the mojito without the rum. Like it's not that. So
yeah. No, I love you have like sour cherry. There were all kinds of really like interesting ingredients. Tamarind, was it? Or fermented lemongrass or something? Some amazing ingredients there. Yeah, that were really...
I wanted it to be something, again, it's easy. You shake it, you pour it over ice. Like you don't have to do anything crazy. You could add soda water, but like my frustration was all these things take so long to mix, or I need to add stuff to make it taste good. But then, of course, if it was going to be easy, I wanted it to be really crazy ingredients that you couldn't just find in your fridge or, on your bar. So, yeah, it's hard to achieve what we did in a bottle that you can just pour. So,
yeah, it's great. Very exciting. Well, I love it. Congrats on everything. However I can help, I'm happy to. We'll definitely be a loyal customer. And it's exciting. Where can people find out more about you? And if they want to invest or they want to buy it, where do they go?
So you can email me. I'm just Vanessa@drinktilden.com. Our website is drinktilden.com. You can find all of our retailers, restaurants are all listed on our website. We have some sales coming up for Black Friday, so you can join our email list there. I send all the emails, so you'll be hearing from me. It's not a spammy email list, that's for sure. It's very intentional. And then you can also follow us on Instagram. So we're just @drinktilden.
Love it. Okay, we'll definitely add all that in the show notes.